Good morning. Good morning. Good morning. It's Eric with Integrity First Home Buyers and CR Property Group. I'm going to start my videos, I think, from here on out with some type of introduction. Good morning, Rob. I want to start my videos with like a cool tagline, like Eric buys houses. I don't know. I need a cool tagline to start my videos with, because I always have like this awkward, long hello, where I say good morning or hello 7 times. So if you have any, happy hump day. What's up, Jason? How are you? Good morning, Rob. So if you have any ideas of how I could start my videos with a cool tagline, let me know what that might be. But I had a couple people reach out to me. Several people reach out to me just this past week who were thinking about getting into real estate investing. And I always move the conversation in the beginning towards one of two very important topics. The first is, what type of investor do you want to be? Active, because this real estate business takes time. Whether it's looking for properties, walking properties, assessing properties, looking for income producing properties, overseeing renovations, screening tenants, whatever. I mean, any aspect of real estate takes time, and you have to make a decision early on about whether you want to be active or a passive investor. And then the second thing is, do you have money? And if not, and by meaning money, like, do you have the cash available to be able to fund your real estate purchases? And if you do, obviously, that's great. If you're in a position to pay cash, that's ideal. You can normally negotiate a much better price when you're paying cash. In a competitive market, if you're making an offer on a property and you're one of 3 to 5 other buyers, if you're paying cash and the other buyers are getting some type of financing, most often they'll select your offer. If you don't have cash, then you need to find somebody else's cash. And really, there's 2 ways to do that. You can get what's called a hard money loan, which I'll talk a little bit about today. And then there's institutional or conventional bank financing. And most investors that don't have their own cash use hard money. So I want to explain a little bit about what hard money is. Hard money is a privately funded loan, normally by an individual or a group of individuals that put their money together and then lend it to investors. It's what I call asset-based lending. So hard money typically focuses more on the asset, meaning they'll fund up to 70%, let's say, of the after repaired value, and up to 100% of the purchase price and all of the renovation cost, as long as that doesn't exceed 70% or 75% of the total appraised value. So if a property appraises for $100,000, they'll give you $70,000. And as long as you can purchase and renovate the property for less than $70,000, you wouldn't have any of your own money invested in it. Now, normally on a hard money loan, your rates are going to range from 9 to 15%. And it may sound high, and it is in comparison to conventional bank financing, but it is much, much easier. They typically underwrite the asset, meaning that they're really just looking at the property. If they believe that the property can be renovated and purchased for less than 70%, essentially the hard money lender is saying, listen, we're willing to take on this risk without a lot of scrutiny on the actual buyer or the investor, because we know that there's so much equity in this deal. And the give and take there is, the easier it is and the more liberal the underwriting is to get the loan, the higher the rate. With hard money loans, they'll fund things like the renovation, where if you go to a conventional bank, they may lend you up to 80% of the purchase price, but you'll have to fund the renovations on your own, unless you're able to get some type of corporate line of credit, which is extremely challenging. They're a little bit more flexible on credit scores. They're going to want, some type of experience. I've seen a lot of hard money lenders have a requirement for experience that you have, but they will lend you up to 100% of the money needed to do that project. They will charge some points on the front end. You may have to pay 3 to 5 points to originate the loan. So on a $100,000 house, if you're buying a $100,000 home, you're going to pay between $3,000 and $5,000 up front to originate the loan. And then, of course, the rates are going to be a little bit higher than what you're used to, between 8 and 15%. But it will allow you to get started in investing much, much quicker. The way that most people get started is they get hard money. They do, 2-3 years worth of projects. They get some experience under their belt. They put aside some assets. They can then go to the bank and qualify for a line of credit or some financing that's a lot more aggressive and borrower friendly when it comes to rates. Typically on a line of credit, you're not paying any or very little upfront points, and the rates are somewhere between 6 and 7% based on today's rates. So that's the difference between hard money. It's a great way to get started in investing. If you're coming across good deals on properties and you haven't been able to get bank financing, I would encourage you to look. If you just Google hard money renovation loans, there's nationwide lenders in there. I'm sure there's some local. I don't have any relationships with local hard money lenders, but 10 years ago, CR Property Group actually would lend hard money to local real estate investors. And, it's a great way to get money to fund your real estate projects when you're first getting started. So if you have any questions about that, shoot me a message. I'll be happy to help you do some research. Again, I think if you just type in Google hard money renovation loans, you'll probably find a ton. There's a lot of money out there to be lent. Private investors that are lending money, they are controlling the process. Each time that you request a renovation draw, like if you say, hey, I'm $10,000 into my renovation, I'm requesting $10,000 of that money. They'll normally have an inspector come out to verify that the work is completed and that it justifies $10,000 worth of funds. But anyway, it's a great way to get started. Look into hard money if you want to buy property. It's a lot easier to get approved for hard money than it is for a bank loan. And then as long as you account for the interest, when you're doing your math about what you're going to buy it for, the renovations, that carrying cost is something that a lot of people forget about. And carrying costs can be, you have to insure the property for the 3 to 5 months that you own it. You're going to have interest over those 3 to 5 months. Most hard money loans will do 6-month terms with an extension at the end of the 6 months, and the extension may cost you another 2 to 3 points on the loan. So just make sure if you're borrowing hard money or any money that the carrying cost is something that you factor into your math when you come up with an offer. That's it. I hope everybody has a great day. Happy hump day, like Jason said, and I'll see you guys around.